Tata Communication has indeed reported a set of weak numbers for the March quarter. Do break down these numbers for us, Somit. You have all the details. Take it away.
Well, Tata Communications reported a weak set of numbers in the fourth quarter of FY23. The big miss had come in on the margin front, where the margins came in at around 22.6% as against expectations of close to 23.9% by the analyst. Now, breaking down the numbers, if you see the data segment revenue was around 2.8% on a Q-on-Q basis, which was pretty much in line with what the street was expecting. But the big miss came in on the margin front, and that is because the data segment EBITDA declined nearly 7% on a Q-on-Q basis to around 882 crore rupees, and this was primarily on the back of employee costs that we had seen in the fourth quarter. Now, in fourth quarter, if you see, the company has added nearly 250 employees, and in the past 2 years they have added close to 2,000 employees. Now, because of this 250 employee addition, the employee cost increased by around 30% on a Q-on-Q basis. Along with this, if you see, the depreciation cost also had a one-off of around 60 crore rupees due to some write-off, because of which the PAT also declined by around 17% on a Q-on-Q basis. However, on the positive side, if you see, the ramp up in employee was in anticipation of revenue growth, which is clearly been seen in the data segment, and also the management is saying that the order wins has been pretty much strong despite the tough macro environment that we are seeing currently globally. Now, analysts also believe that the margin pressure is likely behind for Tata Communication, and this pressure was owing to employee costs, which is largely now behind for Tata Communication, and going forward they are expecting a sustainable revenue growth along with EBITDA growth. On the free cash flow front, if you see, they generated 630 crore of free cash flow. The capex was higher, around 530 crore, but due to higher free cash flow, the company's net debt came down by around 9%. The board has also approved a dividend of 21 rupees per share as against 20.7 given by the company in the previous year. And in the notes to account, the company did mention some concern around the receivables from Vodafone Idea to the tune of close to 172 crore rupees, but that is just 10% of the annual profit, and the company believes that the balance is good and recoverable as there are ongoing interactions with Vodafone Idea.